Welcome back, guys. Welcome back to IVNT Academy. Hope you guys have been doing good. Hope you guys have been studying, practicing, putting in the hours. Remember, you need to study and understand the market in order to be able to make profits out of the market. So, hope you guys understand now how to identify market structure, how to identify a downtrend, how to identify an uptrend, how to identify a market range, and how, how to identify high lows and higher highs. I hope you guys by now you are able to identify that. So now we're going to be moving to the next step where I'm going to be showing you guys key levels. So key levels are in areas where you're going to be looking to take trades, right? Let me just quickly make a note. Key levels. Areas where we are looking to take trades. Yeah, there we go. So key levels are areas where we are looking to take trades, and we only focus on two key levels, right? The major level and the break of structure key level. So the other thing is you can spot the key levels on any time frame. Doesn't if you're going to be trading, let's say higher time frames, that means you're going to enter based on key levels that you see on a higher time frame. If you're going to be scalping, we're going to be trading on 1 minute. So that means most of your key levels are going to be based on lower time frames. So just know there's no specific time frames to look for key levels, depending on which style you're going to be trading. So that's going to be up to you. Because remember, structure is structure, right? So if you see a higher high in 1 minute, that means the key levels you say 1 minute are going to be valid. So that's something to keep in mind. Structure and structure. Okay, I've been talking a lot now, so let's get to it. If you guys have some books next to you, this one's going to be more interesting. It's going to be more interesting, right? So if this kind of like put everything together, what we have learned: downtrend, uptrend, and ranging markets. So when we add key levels into those things, that's when you're going to be able to know when a key level is about to happen, or when to expect not a key level, sorry, a higher low or a lower high. So with key levels, that when we are going to be able to to identify and be able to know when to expect those highs being created or those lows being created. Okay, let's go. So in this example here, we are in a downtrend, and then we create a lower low. Price pushes back up. It gives us a lower high, and then we push down. And then we break the, sorry. And then we break the lower low, right? So how do we identify key level on this structure? So we are in a downtrend, and price is giving us a lower high and a lower low. So what on this lower high, here, just put this is gonna be our major, and this is gonna be our break of structure. Okay. So how do we identify key levels on this structure? So we are in a downtrend, right? We're moving to the downside. We have lower lows, and then we have lower high, right? So when price creates a lower high, this becomes a key level. This is going to be the area where we're going to be looking for price to come back and retest or break, and then to tell us that we are going to the upside. So this becomes a key level where price can either come retest, give us a sign to continue to go to the downside, or breaking it, confirming that we are about to change direction to go to the upside. So let's quickly do this. So now when price give us a lower high, it rejects and then pushes down. And then now this becomes a major level for us. So this remains a major level until price breaks it, or until price creates a new lower high. So now this remains our major level, and then price pushes down, and then price now breaks this lower low, right? So when price came down, gave us this lower low, and then it pushes up, right? So this became a level where we expect price to come back, either respect it and then we push up, or break it and then give us a lower high. So that's why it becomes a level. Okay, let me just start this all again. So price pushes down, give us a lower low, and then it pushes up. So this becomes a level because now this is the area where price came to give us a lower low and then rejected, pushing the upside. So what we can expect from this level is that we expect price to come back and retest, and then we can push up, or we expect price to do what? To push down, give us a new lower low, breaking the previous low. So confirming that we are in a downtrend, right? So that's why we say this becomes a lower low if it breaks the previous lower low. So meaning that this key level here, which is the area that we are going to be focusing on, becomes very important when price comes back to it, right? In order for us to confirm we're in a downtrend, we need to see price breaking the lower lows. So in order for us to confirm that we are still in a downtrend, we need to see price breaking this level and then coming back to it. Let me just quickly make this nice. Okay, okay, cool. So price pushes down, give us a lower low, and then this becomes a level, and then price pushes up, give us a lower high, and now this becomes a level also, right? So price pushes down, break the previous low, giving us a lower low. In the downtrend, you expect price to break the previous low to give us a lower low. And then you expect price to respect the previous high to give us a lower high, right? So when price pushes down, give us a level, and then it pushes up, give us a lower high, which also becomes a level, and then price pushes down, right? So what we expect now from these two levels is that price is in a downtrend. We need to see a lower high, and then we can continue selling, right? If we don't see a lower high, we need to see a double top, and then we can continue selling, right? I hope you guys can see this now. Let me just throw it on the side. Nice. And then I want to throw another example on the side. We need to see this. So it's going to be a lower high, a lower high, a lower low, lower low. There we go. Okay, cool. Let me quickly clean this, and then you can just start over. Since now that I showed you how to identify the key levels. I just want to show you now how you can combine everything to use those key levels. And how and then we have our lower high, our low, and then we have our major, and then we have our break of structure. Okay, so price pushes down, give us a lower low, and then price pushes up, give us a lower high. So now this lower high area becomes the key levels that we expect price to come back in a retest in order for us to sell. If we break it, this tells us that we are pushing to the upside. And then price pushes down, breaks this level, which was our lower low, to create a new lower low, meaning that we are still in a downtrend. So now we have this key level that we just broke, which was our previous lower low. So now what we're expecting from these two key levels is that now that we got a lower low in a downtrend, we are only going to sell if we get a lower high or if we get a double top, right? So now price pushes down, lower low, lower high, and then we got this new lower low. So in order for us to sell, we need to see a lower high or double top. Those are the only two things that we need to see before we sell. If we don't see any of those, then we are not selling. Sorry. And then price pushes up, right? So what we're expecting from these two key levels is that price to push back up, give us a lower high here, and then price continue pushing down, right? Breaking the lower low, which now becomes a level that we can expect price to come back, respect, give us a lower high, and then we continue selling because we're in a downtrend, right? So that's how you can use the key levels, right? So now let me show you how to use a major key level. So this is an example of a break of structure key level where price breaks and come back and retest, right? So we say we break the structure of the lower lows and then we come in retest and then we continue selling, right? And the reason we're selling is because now price is giving us what? It's giving us lower highs and we are in a downtrend. So we are expecting lower highs to be formed. So whenever price pushes back up, respect this key level and then give us a lower high, we're selling. Whenever price comes back, after we broke these lower lows and then respects this key level and give us a lower high, we're selling, right? So now, in terms of a major level, let's come to this side. So this example is this one here, right? Same as this one. So now let me show you the major level. So on a major level, it's an area where mostly you're gonna get double tops on a major level. Okay, and then so price pushes down, give us a lower low, and then price pushes up. So now we have this level here, which we just created now. In order for us to confirm that we're in a downtrend, we need to see price breaking these lows, giving us a lower low, right? So when price gives us this lower high and then pushes down to these lows here, and then we respect the previous lows, and then we get a low, and then price pushes back up. So now, when you start seeing a market that's ranging, you already know how to identify a range. So that's how you will notice a range. You will notice that the lows are starting being respected on those key levels, and then you start seeing market moving sideways. And that's a range. That's when we start buying the lows and then we're selling the highs, right? You guys know that by now. So here, let's go back to the key levels. So price pushes down, give us a lower low, and then price pushes back up, give us a lower high, and then we push it down. We respect this key level. We don't break the lows, and then we push back up, and then we come in respects this high, and then we push back down, right? So we know you're in a downtrend. We know that we either going to sell at a lower high, or we are going to sell at a double top. So when the price comes back to this key major key level and our lower highs, that's when we do what? That's when we look for a double top, and then we start selling, right? So on a major level, that's where mostly you're going to be selling at double tops, right? And then on a break of structure, that's where you're going to be selling a lower high most of the time. So let me make another example. So price pushes down, give us a lower low, and now this become a level. And then price pushes back up, give us a lower high, and now this becomes a major level, right? So this area here will stay valid until we get a lower high. Or yeah, until we get a lower high. If we don't get any lower high, and then no, I'm confusing myself now. Sorry. So this area will stay valid, right? If we get a lower high, then this is no longer valid. So for example, pushes down, we get a lower high, and then push down. This becomes our major level. This becomes our break of structure level. So if price come back and retest here, give us a lower high, and then we push down. This now becomes our current major level. And then if price breaks this lower low, and now this becomes a break of structure level, right? Which now is either price is going to come back and retest at this level, and then we sell, or price might come back and give us a double top at this major level, and then we sell. I hope you guys get that. So this is valid, but the moment you get a new lower high, this is no longer valid, right? So what to do on a major level? Shabbat. I want to make more examples of the major levels, and then we can go to the charts. And then we can go to the charts. Okay. Okay, so price pushes down, pushes up, and then we break, and then we come back. Okay, so we are still in a downtrend. Price pushes down with a new high, lower high. This becomes our major level, and then we push down, we break the lower low. Now we have this break of structure level. Now price pushes back up, and then it doesn't respect the area that we just broke. Doesn't respect that area that we just broke. So this key level is no longer valid if it's broken. This is not valid. So this is the only level now we're looking at for price to come and react, and then we're going to continue selling, right? If price breaks this area, don't do nothing here. Wait. Sorry. Just do this. Okay, so price pushes down. So we push down, lower high, break the lower lows with new lower lows. So if price pushes back up and then it doesn't give us a lower high and breaks this area, don't do nothing here. Don't do nothing. Do nothing here. Yeah. Do nothing here. Don't take any trades here. Don't buy, don't sell. You wait until price comes to this key level, because what might happen is that price will break this area, which now becomes invalid, and then price will come here and it might start ranging here, and that might give you something like a double top that you might take, and then it just shoots up, and then we shoot down, because there's still this major level that price might go to. So if his price is in the middle of these two areas, rather wait for price to push back up, at least reject around here, and then you can start selling, right? So that's why we always need to take trades at our key levels, right? It's either we're gonna buy when price buy. It's either we're gonna sell when price is rejecting here after breaking these lows, and we come back and retest. That's where we're gonna start looking for sells. But then if we are taken out and then price pushes up and start rejecting here, we do nothing until price comes back and rejects here. If it leaves without us, it's fine. Let's rather wait for price to break this lower low and come back and retest and give us a new lower high, and then we start selling again. Right? So always know that if you miss a trade, it prepares you for a next one. So don't worry if you miss the trade. So those are key level, guys. I'm just gonna do one more example on the uptrend so I can show. Okay. It's gonna be more clear when we go to the charts. It's gonna be more fun. So push the upside, we have a new higher high, and then we got a new lower low. Sorry, higher low, and then we push back up, right? Same rules applies to the uptrend. It's just the opposite of a downtrend. And one more thing to add is that you will find major levels at your higher lows and lower highs. That's where you will find your major level, right? And then the break and retest level you will find after you break the higher high or you break the lower low. So that's just something to keep in mind. So this is gonna be your major level, and then this is where price is gonna break the higher high, and then you expect price to come back and retest, right? Which is the break of structure. Okay. So on this side is gonna be a double top example. The reason I'm showing you an example where price breaks and then doesn't retest is because I just wanna show you that how just wanna show you how you can use the major level if the break of structure level it doesn't hold, right? So even though it breaks it and then comes back, don't change your bias until this area is broken, right? The only time we're going to be looking for sales is when we get a break out of this area, and then we can begin retest. If we don't break the higher lows, we don't change our bias. Same thing we apply when we're looking at structure. If market is still giving us higher highs and equal higher highs, higher lows, and then we get equal lows, and then we don't break them, and then we continue breaking the high, we are still in the bullish market. Same thing happened here. We break the higher highs, but then we're not breaking our lows, right? We keep on breaking our higher highs. So just keep that in mind. So price push up, and then we got a new lower high, sorry, a higher high, and then we got a higher low. So this becomes a level that price created. If we break this area, we're expecting for market to come back and retest and then we continue, right? But if price fails to retest this area, we're expecting price to do what? To come back here at our major level. So when price pushes up, it's giving us a higher high, which becomes a level. And then when price pushes down, give us a higher low, which becomes a major level, right? So this area is still valid until we create a new lower high. If we don't have a new lower, a new higher low, my mind is still in a downtrend. If we don't have a new higher low, then this is still valid. But at the moment we get a new higher low, then this becomes our new major level, right? And then we have this area here. So let me show another example on the double bottom. So we know that in a uptrend, we only buy at our higher lows and then we buy at our double bottom. On a downtrend, we sell on our lower highs and then we sell on our double top. So how to identify double tops is when price pushes up, give us a higher high, pushes down, give us a higher low. This becomes our major level, and then we break the higher high, and then price falls to make a higher low, and then it pushes down and it respects the previous lows, and then give us a double bottom, and then we buy. So this is how you can use a major level, right? Is when price is not giving us a higher low and then coming back to respect the previous higher low, and then we start pushing back up, and then market also give us a double top, and then on this side market pushes up and then pull back, we get a new higher low, and then price pushes up, breaking the previous higher high, and then it come back and respect that area, and then giving us a what? A higher low, and then we start buying. And then now this is no longer valid, and now this becomes our new major level, and then we continue with the market, right? And on this side, price pushes up, give us a higher high, price pushes down, we got higher low, and then we break the previous higher highs, and then we get a new higher high. We fail to give us a higher low, and then we come back and respect the previous higher lows, and also give us a double bottom, and then we buy the market. This becomes your major level. It's still valid if we don't get a higher low. The moment we get a higher low, then it becomes invalid. But then if we fail to get a higher low, and then this still stays valid, right? So this is how you can identify key levels, and this is how you can use them. So now I will catch you guys on the next video where we're going to be jumping into the charts. Cheers.